Good day everyone. I'm the first reporter of the Chapter 4 Income Taxation of Corporations. First, we have the learning objectives. After studying this chapter, the students are expected to be able to know the nature of corporations for tax purposes, understand the basis of taxation of income of corporations, identify the classification of income tax of corporations, know the sources of income of the different corporations, classify the income of corporate taxpayers, compute the taxable income of corporate taxpayers, understand the importance of classifying corporations, distinguish ordinary and special corporations, identify the different rates of tax applicable to corporations, enumerate the types of corporations' income subject to regular rates, identify the different types of corporations' income subject to final tax, understand the concept of passive income, identify the rates of tax on passive income of corporations, compute the tax on capital gains, determine the tax liabilities of every corporate taxpayer, understand other income tax schemes applicable to corporations, and learn how to prepare corporate income tax returns. So first, definition of corporation. So ang corporation mo na siya ang isa ka negosyo na gina-recognize sa law, kauban diri ang partnerships, associations, and insurance companies, pero dili appeal ang ubang special partnerships pareha ng general professional partnerships and joint ventures for construction or energy projects under government contracts. So next, the taxability of corporations' income. How a corporation is taxed depends on kung domestic ba siya na naa sa Pilipinas or foreign na gikan sa laing bansa. If kung ang foreign kay resident na anay business dire or non-resident if wala. So the third one is classification of corporations. So there are three main types. First, the domestic corporations. So isa ka entity sa negosyo na gibuhat na naka-rehistro o nakapadagan under the law sa isa ka particular na bansa pareha sa Pilipinas. Next, the foreign corporations. Isa ka entity na nabuo or giayos under the law sa isa ka state, country, or jurisdiction gawa sa kung asa siya naglihok. Example, isa ka company sa US sa Pilipinas. And the third one is unregistered partnerships. Ginatrato sad na murag corporation sa tax. The fourth one is domestic corporation. So, again, ang domestic corporation kay gihimo siya under Philippine laws and it is taxed on all income worldwide. So, the types of domestic corporation, we have ordinary domestic corporation. It is regular corporations. And the second is special domestic corporations na ay special treatment sa tax like lower tax or exempted. Sixth one is the foreign corporation. So again, foreign corporation, wala siya giform sa Pilipinas. So is the two types. The resident foreign na naay business sa Pinas and the non-resident foreign walay business sa Pinas. So next is the importance of classification. Nganong important ang classification? Kay nakadepende diri kung unsa ang bayaran na tax o kung saon siya kwentahon. So here's the key idea. First, the domestic tanan income tax. Worldwide ni siya. So ang foreign kay income sa Pilipinas lang ang naitax. So, the 8th is general rules. Domestic, worldwide income, net income ang base. So, the resident foreign, we have Philippine income lang, and net basis siya. For the non-resident foreign, Philippine income pero gross ang basis, walay deductions. 9 is the tax rates. Regular rate, 25%. Para sa small corporations, we have 20%. Next, we have taxable income formula. Taxable income equals gross income minus deductions. So, gross income is a total earnings. So, ang deductions is allowed expenses. Ginatan-aw kung asa gikan ang income and kung unsang klaseng corporation. For example of Lianga Corporation income, sales in the Philippines, we have 50,000. Sales in Japan, 75,000. Rental in Philippines, 25,000. And rentals in Spain, 45,000. And that includes my part of the report. Now, I would like to turn over the discussion to the next reporter who will discuss the continuation of this topic.
Good day, everyone. I am Lara Sofia G. Omega. I will discussing taxation of corporation. First, we have regular corporate income tax. Means a corporation usually pays income tax on its profit under the tax law. NIRC, some government-owned corporations follow special rules from July 1, 2020 to June 30, 2023. Some corporations enjoy a temporary 1% reduced tax rate. For example, if ABC Corporation earned 1 million profit, it may have to pay corporate income tax based on the application rate. Number 2, tax-exempt corporations, Section 30. Means some non-profit organization, charities, and special organization do not pay income tax. But if they earn income from business activities, that income can still be taxed. For example, a charity receive donation tax exempt. But if the charity incorporates a store and earn profit, that profit may be taxable. Number 3, special tax rules means some income like interest, royalties, and capital gains may be subject to final tax. Special tax rates may also apply to selling share or capital asset. For example, if a corporation earn interest from a bank deposit, the interest may already be subject to final tax. Number 4, intercorporate dividends means dividends received by one domestic corporation from another domestic corporation are usually tax exempt. Foreign dividends may also be exempt if legal requirements are met. For example, company receive 100,000 dividends from company B. Generally, no tax on the dividend. Number 5, foreign currency deposit rules means some foreign currency income of banks may be tax exempt while certain interest income may have a 10% final tax. For example, interest earned from foreign currency deposit may be taxed at 10%. Number 6, taxable income formula means taxable income is computed by subtracting deductions from gross income. Formula, gross income deduction equals taxable net income. For example, is 500,000 minus 250,000 equals 250,000 taxable income. The corporation pays income tax based on 250,000.
So now we are here in income taxation of educational institution. Sa income taxation, naatay tulo ka educational institution. Ang proprietary educational institution, mo siya ang mga private schools, non-stock, non-profit educational institution. Mo po ni siya ang kanang eskwelahan nga nainegosyo, pero ang ilahang income na gina-earn is ginagamit nila para sa school. Tapos, naapod ang government educational institution. So, mao ni siya ang kanang mga public schools. Karon, ang kaning proprietary educational institution, mao ni siya ang kanang schools. So, for example, ang kanang Jose Maria College, owned by Mr. Apollo Kibuloy, Pastor Apollo Kibuloy. Ano siya kanang sa gawa sa ilahang school, makakita ta dira ang convenience store. So, kana siya nga business is gitagihan na siya sa tagiya sa eskwelahan. Ang kanang income ana nila, ang rules kay pag mula pa sa 50% ang imuhang income ana nila is na sila rate tax rate nga 25% or 30%. Depende sa ang 30% nakadepende siya kung dako kaayo ang iyahang income, nilapas jud siya. Tapos kung wala pud nakaabot og 50% ang imong income within the year, ang imuha pong tax rate is 10% lang. So, ang saon. Say for example, ang DCC, naa siya ka ng sarili niyang business. Panangita, libutan na to. Ang iyahang gross income is 500,000. Tapos, iyang allowed deduction or kana iyahang mga gastos is 250,000. So, unsaon? Step 1, get the taxable income. Unsaon pagkuha? Gross income minus allowed deduction is equals to taxable income. Ano na siya? 500,000 minus 250,000 is equals to 250,000. Ano na siya imuhang taxable income. So, proceed sa next step 2. Kung saan siya ang step 2, i-compute mo ang income tax, depende sa iyahang situation, kung taas ba iyahang kita or dili. So, pananglitan, imuhang tax rate is 10% lang. So, ano na siya? Taxable net income times tax rate is equals to income tax due. Imuhang bayronon na final. So, dara, 250. Pero saan ka ng 250? Dara, taxable income. So, 250 times 10% is equals to 25,000 pesos. Mao na imuhang tax due kung imuhang income is wala ka lapas sa 50%. Don't forget, because 50% pag mubaba, mo na siya mga rules. Mo na siya tumong. And then, kung kunyari po, dako kag income, nilapas po 50%, ang imuha pong butangan na to siya 25%. So, 250,000 times 25% is equals to 62,500. So, mo na siya imuhang tax due. Okay. So, step 3, kay private institution man atong gigamit, tas diba, ang kanimanggong non-stock, non-profit educational institution, kay ang kuan siya, nag-earn siya income, pero ang iyahang income is ginagamit ra gyapon sa school. So, exempted siya sa tax. Tapos, ang kanipong government educational institution, mga public school, dinigin na sila po nagabayad og tax. So, proceed ka. Magatag og example nga mag-compute ta og income sa school within 2026. Saon? Okay, for example, income. Tapos, ang iyahang related activities is kanang income niya sa kanang, para lang po sa school, kanang kunyari ang DCC is na ay negosyo, pero ang iyang income kay ginagamit na gyapon sa DCC, so mo na siyang related activities. Related siya sa school. Nana. So, butangan na to siya dirag 500,000. Tapos, unrelated activities, kunyari ang DCC na ay kuan ay branch na ilaing business. Tapos, iyahang income is 250,000. So, ang total gross income niya, i-total mo siya, 500,000 plus 250,000 is equals for 750,000. O karon, i-compute na po nimo ang imong expenses. School operation, kanang mga ginagamit nimo, kumbaga, may mga gasto sa school, kanang papers, kanang sa sorry for that. It's just my mother, so forget lang there. So, and now, sa school operation ka na sa mga magpa-ay gym, na ipaayo nga buildings, imong ana. So, mauna siya atong ibutang sa school operation. So, butangan na to siya dira ag 300,000. Tapos, unrelated activities, ka na mga personal nga gasto sa GCC or ka na maglaglaag or whatsoever. Butangan na to dira 100,000 nga expenses. So, ang total expenses niya is, butangan na to 450,000. Karon, kung saan pagkuha ang atong percent, kung dako ba siya o income. Unrelated income, katong mga naka-income nimo nga dili baahid sa kuan sa DCC, kay kani magong related activities is kuan niyo siya kanang exempted niyo siya sa tax. Kay for school man siya. So kani kang diri kani siya taxable man in income, taxable siya. So mao ni siyang unrelated income divided by gross income times 100%. Ang 100% guys is given na siya. So karon 250,000 dara divided by 750,000 times 100% is equals to 0.33% or 33%. Now, ang 33% ba kay taas or mubo sa 50%? Diba dili? Mas baba ang 33%. So, ang tax rate nga kwaon is, ang rules is 10% lang. So, karon. Step 2, get the taxable income. So, maano ni siya karon? Total gross income, mao ang 750,000 minus total expenses. Kani siya ang kani o kani. So, 750,000 minus 400,000 is equals to 350,000. Mao na ni siya imuhang taxable net income. We're not done yet. Tapos, step 3, get the tax due. So, saon? Taxable net income times tax rate is equals to income tax due. So, 350,000 times 10% is equals to 350,000. So, mauna ni siya imuhang income tax due. Siya. So, wala ni imuhang ginabayaran sa Tax. Kani nga imuhang business unrelated. So,
First is the less expenses from school operations, which is 300,000 pesos, and from unrelated and other activities is 100,000, in a total of 400,000 pesos. And the taxable net income is 350,000, and it multiply it by the tax rate of 10%, and the income tax due is 35,000 pesos. Next is C. The Ultimate Hospital presented the following information. First is gross income from pharmacy, which is 25,000, and gross income from laboratory fees, which is 40,000, and rental income from leasing half of its building to a proprietary medical school, which is 85,000, and the other gross income from patients, which is 20,000, and add all of it, and the total gross income, which is 170,000 pesos. Next is deductions allowed. First is cost of medicines, which is 10,000 pesos, and the depreciation of equipment is 15,000, and the rent expenses 30,000, and the utilities 12,000, the salaries of employees, which is 18,000, and in a total deductions of 85,000 pesos. And net income as well is, which is 85,000, and compute the income tax due of ultimate in accordance with the provisions of the NIRC. And next we will go to the solution, and the rental income from leasing half of its building, which is 85,000, and divided by gross income from all sources, which is 170,000, and the results, the percentage of income from unrelated activities is 50%, and thus the income tax due of ultimate is equal to 8,500 pesos, and it computed as follows. Gross income from pharmacy, which is 25,000, gross income from laboratory fees, which is 40,000, the rental income 85,000, and the other gross income from patients, which is 20,000, in a total gross income of 170,000 pesos. Next is less deductions allowed. First is cost of medicines, which is 10,000 pesos, and the depreciation is 15,000, the rent is 30,000, and the utilities is 12,000, and the salaries is 18,000, and the total taxable net income of 85,000 pesos. And it multiplied it by applicable tax rate, which is 10%, and the results is the income tax due is 8,500 pesos. And if unrelated income exceeds 50%, then the ultimate tax due is it will be multiplied by 85,000 and 25%, which is the result is the tax due is 21,250 pesos. So we will go to the special resident foreign corporations. First is the international carrier, the second is the offshore banking unit, the third is remitting branches, and the fourth is regional area HQ. And based on the above enumerations and rates of tax imposed on income of special resident foreign corporations under sections 28, and the following table summarizes the sources of income, which is the kinds, sources, tax base, and rates. And to the category of kinds, which is the international carrier, and offshore banking unit, and remitting branches, and regional or area HQ. And the sources here is the The other three branches, which is Philippines only, except for the regional or area HQ, which is exempt, and the tax base, which is the international and offshore banking unit, which is the gross billings and gross income, and the remitting branches, which is the tax base is gross remittances, and it is exempt as well for regional or area HQ. And the rates of it is, the first is 2.5% for international carrier, and the offshore banking unit is 10%, and third is the remitting branches 15%, and the regional or area HQ, which is exempt as well.
Good day. My name is Jumrix Bibakan, and my topic is Notes on Resident Foreign Corporation. What is Notes on Resident Foreign? Gross Philippine billings for international air carriers refers to the amount of the gross revenue derived from carriage of persons, excess baggage, cargo, and mail originating from the Philippines, and a continuous uninterrupted flight, irrespective of the place of sale or issue in the place of the payment of the ticket or the passage document, provided the ticket validated, exchanged, and or endorsed to another international airline form part of the gross Philippines billings if the passengers boards a plane in a port or point in the Philippines. So yeah, this note explains gross Philippine billings or GPB for international airlines. It means the total income they earn from passengers, cargo, and mail that starts their flight from the Philippines. Even if the ticket was bought or paid for in another country, it still counts in GPB as long as the flight begins in the Philippines. Also, if a ticket is changed or transferred to another airline, it is still included in GPB if the passenger boards in the Philippines. So, in short, guys, if the trip was start in the Philippines, the income is taxed as a gross Philippine billings, no matter where the ticket was sold or paid. So let's move to the passive income of corporate taxpayers. Nature of passive income. Passive income is a reference to income derived from any activity in which the taxpayer does not materially participate. Material participation is the taxpayer's involvement in the activity on a regular, continuous, and substantial basis. A taxpayer who puts his money in investments, management accounts, and whose only involvement consists making addition or withdrawals for the account from time to time would not satisfy the material participation standard. So also a taxpayer who earn in the interest from his bank deposits. So passive income, guys, it is a corporation that it is corporation that not earn in any business activity or any activity. So material participation, it is a so this means you are regularly and actively involved. If you're not like when you just invest money and occasionally add or withdraw funds, then the income you earn is considered passive income, right? These are the example of passive income: interest from bank deposits, earnings from investment. So in short, if the company earns income without actively working for it, that income is considered passive income. Items of passive income. The following items in general are considered as passive income, subject to final tax of domestic and resident foreign corporation, whether ordinary or special. Interest on currency bank deposit, and yield or any other monetary benefit from deposit, substitute and from trust funds and similar arrangement. Receive and royalties derived from the sources within the Philippines. So this is the types of passive income. So interest income received from depository bank under the expanded foreign currency deposit system. So if you were gain an income through interest, then that's called passive income. So, dividends received from domestic corporation. Intercorporate dividends. So yeah, if you receive an dividends in a corporation, then that will also called passive income. Capital gains from the sale of the shares of stock in any domestic corporation traded in the stock exchange. And also capital gains from the sale of shares of stock in any domestic corporation traded in the stock exchange. And lastly, capital gains from the sale of the exchange or the deposition of lands and or buildings. So income derived by depository bank under expanded foreign currency. Deposit system from foreign currency transactions with local commercial banks. Central, including branches of foreign banks that may be authorized by Bangko Sentral ng Pilipinas or BSP to transact business with foreign currency, deposit system units, and other depository banks under the expanded foreign currency deposit system, including interest income from foreign currency loans granted by such depository banks under said expanded foreign currency deposit system to residents. So, based on the items enumerated on page 4 to 16 and the rates of tax imposed on certain passive income of domestic and resident foreign corporation under section 27 and as well as under section 28 of the tax code, the following table summarizes items of passive income and tax rate applicable to domestic and resident foreign corporations. And this is the type of passive income: interest income on currency bank deposit, other monetary benefits from deposit, substitute trust funds, and similar arrangement royalties. And these types of passive income applicable to tax rate to domestic corp by 20% and resident corp and also 20%. And there is income received from this depository bank under the expanded foreign currency deposit system. And tax rate of domestic corporation by 15% and also the resident corporation by 15%. And the dividends received from a domestic corporation, resident foreign corporation, is exempt. And in the domestic corporation and also the resident corporation is exempt. And capital gains from the sale of the shares of stock in any domestic corporation not traded in the tax exchange. It is tax rate by 15% and also the resident corporation by 15%. And capital gains from the sale or deposition of lands and or buildings. So 6% based on higher between FMB or gross selling price of the domestic corporation and the resident corporation, it is subject to basic tax. And yeah, lastly, income derived by depository bank under the expanded foreign currency deposit system from foreign currency transaction with local bank, commercial bank, including branches of foreign banks, and etc. It has a 10% in the corporation and 10% and the resident also. So yeah, let's move on to the final tax on certain income of non-resident foreign corporation. So this certain tax it is not in the resident foreign, okay? Not a resident corporation. As previously discussed, ordinary non-resident foreign corporations are taxed based on their gross income within Philippines, which consists of interest, dividends, rents, royalties, salaries, premium, profits, income, and this is subject to 25% fixed rate effective July 1, 2020. So, if you are non-resident but your corporation is in the Philippines, you were more likely income tax. It's because your corporation is registered in the Philippines, right? Whether you are non-resident but your corporation is in the Philippines, you are considered to be tax of interest, dividends, rents, royalties, and salaries. Premiums, profits, income is subject sa 25% fixed rate. Okay? But however, there are certain items of receipt which non-resident foreign corporation receive that are subject to tax rate than I mentioned above. These items of income are therefore considered as the exemption to the general rule applicable to non-resident foreign corporation. So, the following items of income received by a non-resident foreign corporation, although subject also to final tax, are tax rates as follows. A final withholding tax on the tax rate 20% imposed on interest income earned on foreign loans contracted after August 1. So, non-resident foreign corporation is tax rate within 20%. It is imposed interest income earned on foreign loans. It is contracted on the August 1, 1986. A final withholding tax at the rate 15%. It is hereby imposed on the amount of the cash and or property dividends received from domestic corporation, which shall be collected and paid as provided by in a section 57 or A of this code, subject to the condition that the country in which the non-resident foreign corporation is domiciled shall allow a credit against country which non-resident corporation is domiciled shall allow and credit against the tax due from the non-resident foreign corporation, tax deemed to have paid in the Philippines equivalent to 15%, which presents the difference between the regular income tax and 15% tax on dividends as provided in this subgraph, provided that the effective July 1, 2020. The credit against the tax due shall be equivalent to the difference between the regular income tax rate provided in Section 28 of this code and the 15% tax on dividends or 10% or 25% less than 15%. So that's all for my part. I hope you learned for today and thank you. Peace.
Good day, everyone. My name is Margaret Envilla Hermosa, and I will discuss the Alba Corporation. So, page 113 to 114. Alba Corporation has the following income from 2020 times 2. So, first is interest bank deposit BPI Makati, inclusive of without holding tax, 200,000. So without holding tax means wala pa siya deduction from the interest. Second is interest US dollar deposit to BPI Makati, including without holding tax, equivalent piso, 80,000. So interest earned from US dollar account in BPI Makati branch. So amount convert into the Philippine pesos. A third is Royalty Philippines, 700,000. And income earned from royalties inside the Philippines. So royalties payment using sila og property, copyright, patent, and trademark. Four is Royalty USA, 300,000. So royalties income earned from the United States. And five is dividends from resident foreign corporation, so 100,000. And dividends sila receive from foreign corporation operating residing in the Philippines. So dividends is share of profit to shareholders. So we compute the final taxes paid. The taxpayer is first domestic corporation, second is resident foreign corporation, and third non-resident foreign corporation. So first is domestic corporation. So katong sa example ni Alba Corporation, so need na to siya i-compute. So naay tulo. So, first, domestic corporation. Second is resident foreign corporation. And third, non-resident foreign corporation. So, ang unahan na itong i-compute ay ang domestic corporation. So, ang nasa PPT, no, ang solution ay first, domestic corporation. Interest of income BPI Makati, itong nasa example sa Alba Corporation. So, iyahang interest deposit bank is 200,000. No, so, unahan na itong Philippines. Second is royalty income Philippines. So, 700,000. So, i-plus na to na siya. So, 200,000 plus 700,000 is 900,000. Ang total income, passive income niya. So, dali na po ito tax rate sa Philippines, no? So, gamito na to ang 20% kay ang 20% bao mo dyan na ang Philippine peso deposit and royalties. So gamito na to kay mao man ni ang government sets standard final without holding tax of 20% of this type massive income. So 900,000 so kaning total mass passive tapos i-times na to siya i-times sa 900,000 times sa 20% so equal 180,000 ang final tax sa Philippines. Ang next is interest on US dollar deposit. So first kay another is interest US dollar deposit BPI Makati including without tax equivalent peso is 80,000. Botang na to sa 80,000. Ang tax rate naman niya is 15%. So, ganun 15%? Why? Kay ang interest from foreign currency deposit units or FCDU like US dollar accounts in the Philippine bank. So ngano, ang government nagahatag og lower tax rate to encourage no foreign currency deposit so i-invest in flow into the Philippines banking system. So ang peso ang income tax rate no kay peso banks interest is 20%. So standard final tax is Philippines royalties 20% jud. So ang standard passive income tax US dollar deposit 15%. So incentive from foreign currency inflow. So balik na ta. So interest US dollar deposit it 80,000. Ang tax rate is 15%. So kani siya i-times na to gyapon para sa ng total massive income, no? So una. So first 80,000 i-times sa 15 80,000 times sa 15% so 12,000. 12,000. So next is ang notes from US divided from resident foreign corporation are generally subject regular rates, basic tax. So, next is resident foreign corporation. So, same sa first tax, same sa final tax. Computed in the number 1 shall be paid by resident foreign corporation. So, sa third na tayo is non-resident foreign corporation. So, non-foreign corporation, first is interest income, BPI Makati is 200,000. Ang royalty Philippines is 700,000. And dividends from resident foreign corporation is 100,000. So, i-plus lang nato na silang 200, 700, and 100,000. We know siya 1 million. So, ang final tax rate niya is 25%. So, 1 million, i-divide, i-times lang sa 25%, which is, ang mugawas, ang final tax beheld is 250,000. No, so, kaya ang tax is imposed only in income earned within the Philippines. So, ang non-resident foreign corporation, ang 25% final tax rate is applied to total total taxable income. So, ano na siya. Next is Additional case small b non-resident foreign corporation receive the following items of income from source within the Philippines during 2010. So, ang interest income foreign loan. So, on loan. So, ibalik to sa domestic. So, ang domestic is created the Philippines. A resident foreign corporation is created abroad but doing business in the Philippines. So, ang non-resident foreign corporation is nag-create siya sa abroad but not doing business in the Philippines. So, first is ng interest income foreign loan contract in 20 times 2. So, na ay 20,000. No, 20,000. So, if ang borrower in the Philippines, this is maybe considered a Philippine source interest income. Usually, subject is 25% final without tax for an RFC. So, divided from a domestic corporation na ay 40,000. So, ang 40,000 is a dividend from the Philippines corporation is taxable siya to an RFC. Usually, 25% yun siya final tax or lower entity applies. Next is divided from resident foreign corporation which is na siya 50,000. So, ang 50,000 taxable siya only if at least 50% of the corporation income from the Philippine source. 4 is selling price of share of stock sold through direct buyer. So, ang acquisition cost is 40,000. So, and 90,000. And so, selling price share stock sold through the direct buyers is na 190,000. So, ang acquisition cost niya is 40,000. So, nag-gain og 90,000. So, 90,000 i-minus na to siya sa 40,000. So, natay 150 capital gain. So, explain na siya taro. Ang selling price share of stock sold directo. So, ang selling price niya is 190. Ang acquisition cost niya is 40. So, ang the non-resident foreign corporation nagasold siya share of stock directly to the buyer, not through the stock exchange. So ang acquisition cost means ang original amount paid niya when ang share with kanang gipalit na siya ba to get the gain. So, para makuha na to ang profit, so 190,000 i-minus na to sa 40,000, so 150. So, ang capital gain niya is 150. So, ang atong 150 gain manggod is mo nang subject kung kanang capital gain tax under the Philippines tax rules because ang share were sold directly and not through the stock market. So, nagpalit sila share for 40,000 tapos nabaligyan nila og 190,000. So na ilahang profit is 150,000 profit. 5 is royalty income on patent. So na ay 100,000. Ang royalty earned from the Philippines use is patent subject to 25% without holding tax. So what is ang royalties mo na income earned from allowing someone to use intellectual property such as mga patent, trademark, copyright or mga unsa pa na. Next is capital gain on sale share of stock. No, so kato ni amount. So first, ang amount so interest income from foreign loan first. So ang amount niya is 20,000. So i-times na to sa tax rate ang 20%. Ang tax yun niya is 4,000. And dividends from the domestic corporation is na 40,000 amount. So, i-times lang nato siya sa tax rate na 15%. So, 600,000 ang tax due. Ang dividends from resident foreign corporation is 950,000. So, i-times lang nato siya sa tax rate na 25%. So, i-equal na siya is ang equal niya is 12,500. Royalty income of patents, so na ay 100,000. Ang tax rate niya is 25%. So, i-times lang nato siya and ang total is iyahang tax due is 25,000. No, so ay 25,000. So, ang capital gain on sale share of stock is na 150. Ang tax rate niya is 15%. Ang tax due niya is 22,500. So, i-total na to na tanan tong tax due as 4,600, 12,500, 25,000, and 22,500. So, na ay 700,000. So, ang total final tax paid is 700,000. That's all. Thank you.
Good day, everyone. I will be discussing the income taxation of corporations. Capital gains from scales of share stack are taxed at 15% based on the net gain. For example, if the gain is 150,000, multiply it by 15%, so the tax due is 22,500. Including other incomes, the total final taxes paid can reach up to 70,000. Next is final withholding taxes. These apply to different types of income with specific rates. Interest income is taxed at 20%. Dividend and royalties are both taxed at 25%, while capital gains are taxed at 15%. If we compute all this based on our example, the total final taxes amounted to 74,000. And next one is, now for the sales of real property, the capital gains tax rate is 6%. We compute this based on whichever is higher between the selling price or the fair market value. In our illustration, the tax base is 1,050,000. So 1,050,000 multiplied by 6% is equal to 63,000 tax. But there is an exemption. Resident foreign corporation do not pay this specific capital gain tax. Instead, the gain they earn is added to their regular taxable income. Moving on to minimum corporate income tax, or MCIT, is equivalent to 2% of gross income. And it starts on the 4th year of business operation. We use MCIT when it is higher than the regular income tax, or if the company has no profit. It is calculated quarterly, and the company pays whichever is higher between MCIT and the normal tax. We can use credits like taxes withheld, but remember that excess MCIT from the last year cannot be carried over or credited for the next period. Thank you.
Good day, everyone. My name is Bea Garcia Saiti Tagalog. So my topic today is about important features of MCIT. So first is apply only when 2% of gross income exceed regular income tax. And next is any exempt MCIT over regular tax can be carried forward and created against regular tax of the next in 3 years. Calculated annually and quarterly paid quarterly if higher the regular tax with cumulative amounts compared each period sent thus. So, pasabot daw ato, conditional imposition impossibly impose lang ang MCIT, which is ang 2% na gross sa income. Kapag mas malaki, ito ang compare na normal income tax rate. para ito sa masiguro na kahit maliliit o zero taxable income ng company based on regular rules, magbabayad pa rin sila ng minimum tax. And next is the tax credit carry forward kapag mas mataas ang binayaran ng MCIT kaysa sa regular tax sa isang taon, hindi ito masasayang. Pwede mo siyang gamitin ng bawas credit o regular tax na babayaran mo sa susunod na 3 years. Nandyan ito para hindi ka ma-overtax kapag naging profitable na ulit ang business of after. Magbabayad ng mas mataas na minimum tax noong mahina pa ang kita. And frequent application, kinocompute ito early at quarterly, every quarter. Kinocompare yung total o cumulated amount ng MCIT at regular tax kapag mas mataas ang MCIT. Kailangan ng bayaran agad yung different the same of quarter. Para consistent at regular ang pag-remit ng tax sa buong taon. So, the next is ang MCIT suspension. The Secretary of Finance can stop MCIT position for corporation with heavy losses due to labor dispose, force major or legitimate business service. So, exempts ang interest, school, hospital, non-resident, corporation, international. Carries the offshore banking units sa MPZA. And registered firms don't pay MCIT. Next, the tax payment rule payable amount is the higher value between normal income tax MCIT. Becomes a lower. 2021 is 15K thousand. Normal tax is higher excess MCIT. From prior years, usage is created. And so, pasabot daw ato ang suspension ng MCIT pwedeng ipahinto ng Secretary of Finance. Ang pag-charge ng MCIT sa mga business, sa mga kumpanyang malaki ang lugi. Dahil sa labor ng dispons, natural o calamities, force majeure or valid business problems, ito ay para hindi sila mahirapan, lalo na kapag may mga hindi inasang sitwasyon. Accepted companies, may mga entities na hindi sakop ng MCIT tulad ng school, hospital, foreign corporation na walang permanenteng base dito, international airlines, shipping, offshore, banks, at mga kumpanyang na-register sa APZA. And, paano na-incompute ang tax? Ang babayaran ay kung alin ang mas malaki, yung normal tax o yung MCIT. Kapag sa mga nakarang taon ay mas matataas ang binabayaran mong MCIT sa normal tax. Yung sobra ay amount ay pwedeng gamitin ng bawas o credit. Kapag sa kasalukuyang taon naman ay mas mataas ang normal tax kaysa sa MCIT. For example is 2020 at 2021, mas mataas ang MCIT. Kaya yun, binabayaran at yung sobra ay naiipon bilang credit. And 2022, mas mataas ang normal kaysa normal tax, kaya ginagamit yung naipong excess. MCIT, credit para mabawasan ang babayaran, kaya naging 15,000 na lang ang due. So, next is ang MCIT. Excess credit and access. So, next is ang MCIT. Excess created unused exempt MCIT can only be deducted against higher normal tax within the next 3 years. Any remaining amount after that in charge through retained earnings. The tax return filing quarterly corporation file completed income summary, and pay tax within 60 days after each quarter day ends, and final adjusted due on or before the 15 days of 4 month. After that, the year's in the tax payment, a final tax due completed by subtracting quarterly payments from total annual tax. Overpaid amount may be refunded or created future tax liabilities. And next is example in 2021 is the Balena crop paid to 110k quarterly but only on 85k, resulting in 25k overpayment. So ang pasabot daw ato is ang MCIT credit limit yung sobrang binabayaran. Ng MCIT compare sa normal. Tax ay pwedeng gamitin lang as a credit sa loob ng 3 consecutive years. Kapag hindi pa rin nagamit after 3 years, ililipat na ito ng charge sa retained earnings ang company. Ibig sabihin, hindi na ito pwedeng i-credit as a future taxes. Ang pag-file ng returns quarterly, every after each quarter, kailangan mag-submit ng report ng mga income o deduction within 60 days. Tapos, bayaran na rin ang due tax para sa period na yon. Final return, pagkatapos ng buong taon, ay may deadline na April 15 kung calendar year o ika-15 ng ika-4 ng buwan matapos ng fiscal o year para sa final computation. And the next is payment process. Ang total tax na babayaran sa dulo ng taon ay nababawasan ng mga naibayad. Sa nakaraang quarter, kapag sobra ang binabayaran na pwede itong i-refund o ilipas as credit na naibabawas sa tax na nababayaran sa susunod na taon. And for example, noong 2021, mas mataas na ibabayad ang quarterly payment ni Di Balena sa 100k kaysa dapat lang na tax na 85k. Yung sobrang 25k ay pwede niyang ipa-refund na gamitin pambayad sa tax niya for 2022 at beyond. Thank you.
Good day. Our topic for today is corporate tax compliance and calculation. The Philippine corporate tax system operates on a cumulative pay-as-you-go basis, ensuring the government receives revenue throughout the year while allowing corporations to reconcile their final liabilities annually. The first, the filing timeline. The timeline, pay as you earn instead of paying one giant bill at the end of the year. Corporations pay in stages. These are quarterly, first, second, and third quarter. You file every 3 months. Each report is cumulative. Example, your third quarter report includes everything from first and second quarter. Annual, the true up. Every April 15, you file a final report to settle the exact balance of the whole year. The second, the higher of rule. The government wants to ensure every profitable looking business pays at least something. You must calculate your tax 2 ways and pay whichever is higher. Normal income tax, 25% of your profit after expenses. Minimum corporate income tax, 1% of your gross profit before most expenses. If you end up paying the minimum corporate income tax because your expenses were too high, um, you can use the extra payment as a credit to reduce your taxes over the next 3 years. The third, tax credits and payments. Settling bills when you file your final annual return, you don't pay the whole amount from scratch. You subtract what you've already prepaid minus any overpayments from the previous years, then minus the cash you've already paid during the first 3 quarters. The fourth is settlement outcomes. What if you overpaid? If your calculations show you paid the government more than you actually owed, you have two options. Carry over, which is use the extra money as a coupon to pay next year's taxes. This is the simplest route. The next is refund. Ask for the cash back. Through this usually triggers a government audit. The bottom line, the system is designed to keep tax collection steady for the government while preventing companies from being hit with a massive, unmanageable bill at once in April.